Despite being close to an all-time record high, Australia's stock market operator, the ASX, does have its problems. It's about a lack of company floats, IPOs or initial public offerings coming onto the market. Look at this. Just go back a few years and each year many dozens of companies listed. It was 202 back in 2021. That has simply dried up. There have only been 4 this year. Now, Virgin is to come, of course. Talk to the right people and you discover life as a public company is actually quite tough. There are too many regulations, there are too many potential lawsuits for directors, too many impatient shareholders who are too ready to dump management if something goes wrong. Well, today, the corporate regulator ASIC instigated a 2-year trial to trim a week off the timetable for companies that seek a fast track to the ASX. Largely, this is about cutting red tape. But one person who says it simply doesn't go far enough is Senator Andrew Bragg, the chair of the Senate Economics Committee, who joins me now. Andrew, always good to chat to you. You say this doesn't go far enough, and I mean, we see the numbers there. It's actually ridiculous how few public floats there are right now for the Australian public to take up.
Well, Ross, the public listed markets in Australia are now a backwater. As you say, there are very few listings coming on, and that's because the economy is creaking under the weight of Labor's regulation. And frankly, companies don't want to list here because it's too hard. And so that's why it's so important that we look to find ways to deregulate and to drive productivity through our financial sector and across the economy.
So if you say that, then this move by ASIC today should be something that's welcome. But you say, well, it doesn't really go anywhere near what needs to be done.
Well, it's a step in the right direction, but it's a much bigger problem we're trying to solve here. And it is very hard to list a company in Australia. It is very expensive, very onerous. You have to have hundreds of pages in a disclosure document. And the exchange itself, I think, at times can be very risk averse. So the whole listing environment is very poor and it is highly regulated. And that is why the Treasurer, Jim Chalmers, should be identifying this as an area for deregulation. He now says he believes in deregulation. Well, deregulating parts of the financial sector in this way would help all Australians because mums and dads could get access to companies rather than it just being left to the preserve of the big super funds.
Because the big super funds and private equity houses are really getting together in many ways and taking away companies off the market. We hear pretty much every week there's another takeover by private equity, but they're simply not being replaced. And small companies really are distracted because of the red tape you talk about from coming onto the public markets.
So all the red tape in the Corporations Act and all Labor's additional red tape, they put 900 new regulations into the Treasury portfolio in the last Parliament, means that it's very hard for mums and dad investors to get exposure to new ideas and new companies, disruptive ideas. And the beneficiaries of this system are the big super funds and, as you say, private equity. So it's a very bad situation. We want mums and dads to be able to benefit from new ideas and disruptive concepts in the economy. And we want to see a vibrant listing environment. And unfortunately, under Labor, there's no sign of that.
And you don't want it to be the Wild West on the stock market where simply anything goes and people can lie their way to share market success. But what you really do want is you want it to be a place where public capital can actually join with private capital and actually build wealth into the future to provide the capital for the Australian companies. But as you also observe, without that, you get a very weak performing economy, which Australia's got right now.
Well, it's too hard for a small company to go into the ASX. It's too expensive. They want to seek liquidity. They find that all too hard because of the compliance burden. And therefore, those opportunities are lost through Australia, lost to Australians. And so good ideas that are born in Australia then list offshore. We lose that capital. We lose those jobs. It's very, very bad. So there's a real cost to regulation. Susan Lee has identified deregulation as a major objective for us. We want to make it easier for people to do business. We want to make it easier for people to list in Australia if they want to. And we encourage the Treasurer, who now apparently believes in deregulation, to consider the terrible position we have now as a backwater economy where we barely see more than a handful of listings in each and every year.
So is your criticism here based at ASIC, the corporate regulator, which is trying to actually trim some of that red tape, or is it at the government itself?
No, I think ASIC has done a good job here. I think the problem is that the government in Canberra is obsessed with regulation, and Labor enacted 900 new regulations in the Treasury portfolio last Parliament. Now they have been re-elected. The risk is that they continue to put more and more red tape on the economy. And I'll be very surprised if the Treasurer, Jim Chalmers, ever identifies red tape that he wants to cut. But this is an area where he could cut red tape, and he could give Australian mums and dads more access to new ideas and disruptive concepts.
I'll tell you, Senator Andrew Bragg, always good to have in the program. Many thanks for your time today.
Thanks, Ross.